Bloomberg has learned that Chinese fast fashion retailer Shein is seeking to list in Hong Kong as soon as August. After securing approval from China's securities regulator, the firm is seeking to raise about $2 to $3 billion in the IPO. Let's bring in our China correspondent, Minmin Low. Minmin, Shein now becoming sort of a global name these days, given its popularity overseas as well. But it's taken a long journey to get to this point. How's really the listing looking for Shein in terms of valuations and other terms?
Yeah, it's been a very long journey because this company had tried to list twice before in New York and London. Both times its attempts were derailed, and finally it's gotten the approval from the Chinese regulators to list in Hong Kong. Its valuation, though, it has been under pressure. It's been under pressure to cut it to about $30 billion, which is about just a third of what it was at its peak. And yes, as you said, this is a company that at this point is already a household name, right? At one point, it was the most downloaded app in the US. It did very well, especially during the pandemic. But when it came time for the listing in New York several years ago, it faced a lot of scrutiny, particularly around its sourcing of cotton, whether they came from Xinjiang, as well as the working conditions of some of its workers, especially factory workers, of some of its suppliers as well. There were also concerns around the environmental impact of fast fashion as well. So the political pushback from New York really put a halt to that listing, and then it later sought to list in London and also again faced legal pushback from an NGO that was fighting on behalf of the Uyghurs in Xinjiang. Again, it didn't get approval from the Chinese regulators at the time, and finally, after years of downplaying its Chinese roots and shifting its headquarters to Singapore, it finally is going to list in Hong Kong in August.
What about the earnings picture for the company?
So the earnings picture is not looking too positive right now, but this is largely because of the macro backdrop. Because you look at the app downloads for Shein, it's been pretty flat, but if you look at its rivals like PDD and Amazon, they aren't doing so well either. You look at the global web traffic, that's been tumbling down as well this year, and partly because, again, you have the inflation backdrop, fuel prices pushing retail costs up, so that's put a dampener on consumer appetite. You look at its sales growth in the US, it's been pretty weak as well, double digits decline. So it's been seeing a pretty challenged outlook, and you add to that some of the regulatory challenges that you had weathered through over the past year or so, right? The closure of the de minimis loophole that had initially provided some tax incentives for the company, that had disappeared. So it really destroyed that high frequency, small parcel sort of business model, and the company had to invest in warehouses in the US and look at larger consignment sizes. So all of that has pushed up business costs. But again, this is a company that has proven itself to be resilient and battled through many of these challenges over the years. It has expanded beyond fast fashion to be a more well-rounded e-commerce player, selling everything from toys to household products as well. So we'll see. The margins have been compressed, but it's still a profitable company.